We're watching the rally in technology as the Nasdaq goes for 8 days of gains. That would be the longest winning streak of the year. As Apple's market cap continues to tick above the $1 trillion mark, Amazon, Alphabet, Microsoft not too far behind. Amazon hitting a fresh all-time high this morning. Joining us at Post 9, Robert Peck, Global Head of Internet Investment Banking over at Credit Suisse, is here with us at Post 9. Good to see you, man.
Yeah,
welcome
great
back.
to see you. Thanks for having me.
What a windy road it's been for tech. But
yeah.
We had some stumbles in the prints.
Yeah.
You had the $1 trillion valuation, and now we're on this surge of growth over value. And what do you think is
exactly
happening?
Right. Well, if you look at the names year to date, you had some very strong moves, right? Netflix has done well, Google's done well. Even Facebook, with its correction, is still where it was around in May or so. So you've had some very strong performances by the sector as a whole. And what's interesting about that is that the valuations around the sector haven't changed that much. They've actually just adjusted to the new growth profiles, right? So the reports that came in, as well as the new projections going forward. Now, all of that is together is setting up a very robust IPO market. We were talking about that a little bit this off camera. As you think about IPOs so far today in tech, you've had a little over 30 done so far. That puts you on pace for the best year of tech IPOs since 2014. So it sets up a nice robust calendar for the rest of the year, as well as into 2019 as well.
Is there a sense of urgency among these players? Do they think there's a window in which we have to get this done?
I don't really see it as an urgency. It's more that the markets are receptive. And if you think about the number of publicly investable names, it's down about 25% or so for over the last 5 to 10 years. So it's just a lack of investable ideas. And if you look from the investor point of view, they're looking for access to these big themes that are taking place, whether it be AI, ride sharing, autonomous, machine learning, all these big ideas they want to get exposure to. And these names will hopefully provide some of that.
So what does that mean for some of the big, long-awaited IPOs like Uber, like Airbnb, that a lot of investors are expecting to happen next year, especially when you see more regulations coming into certain markets? I mean, we had that ride-sharing cap just here in New York City that affect Uber and Lyft yesterday.
Yeah, and on that, I think the ruling yesterday was relatively unfortunate for a couple of reasons why, right? So one was, I always look at it from the consumer point of view, and because of that ruling, there'll be higher prices, longer wait times, and I think one of the mistakes in the analysis there is they were trying to cap the number of drivers. And when it comes to ride sharing, a driver doesn't equal a driver, right? Some drivers only operate 1 hour a day, a couple hours a week. Some are operating 8 hours a day, 12 hours a day. So I think, they'll see how that plays out a little bit. I think ultimately you want to optimize there for the consumers and make sure they have the best experience. Now, to your question, though, about the IPOs that are coming, I believe Dara has said they're expecting to go in 2019. So that's public information. I think the investors very much want these other names to come because they are these large TAMs, these large investable ideas they can participate in finally.
Bob, I've got to ask you about Tesla. I don't know to what extent. I mean, you're a banker now. You've been one for a while.
Yeah.
You're in that world.
Right.
Is there any avenue you could go down that gets you to a structure that achieves this idea of taking Tesla private?
Yeah, so I can't comment specifically on any client that we have or prospective client that we have, but what I can point to is a couple of things. One, you've seen some of these structures rumored in the press using SPVs, et cetera. You've seen some of these large pockets of capital that are outside the U.S., in the U.S., but also outside the U.S. that could be utilized as well. So I think there's a lot of things that could be done, especially when you get creative in taking companies private, but I can't comment directly on Tesla.
Yeah, although, I mean, it would be a very complicated,
it would be
still very large transaction.
Yes.
Forget the LBO, traditional LBO. I think you can throw that out.
Right.
That does not work.
Yeah.
But you're saying that at least you could imagine some structures that could be explored. I guess.
Exactly right. There are some scenarios out there, and if they are looking to do that, I'm sure they're exploring them pretty closely.
Do you think the focus on sovereign wealth funds is legit or misguided?
I do. I think, well, the focus meaning I still think there's a lot of room there, a lot of capital and pockets there. Obviously, we all know SoftBank and what they've been investing in, how they're primarily funded through the Saudi money and all that. You saw even recently with Snapchat, right? You saw the investment by Prince Alwaleed. So I think you still see more and more capital there, and they're trying to diversify their exposures as well as get extra exposure into some of these big themes that we're talking about. So I still believe there's big pockets there.
Yeah, I mean, the Vision Fund alone is just enormous. And of course, he talks about doing another one. It has had huge implications for overall VC investing and investing in general, hasn't it?
It has. And what you're seeing is more pressure on VCs to either step up on valuation or look a little longer term. So you're seeing prices increase a little bit. But when you talk to SoftBank about this and see some of the public statements that they've made, they're really not thinking about valuation near term, off near-term multiples. They're thinking about these big TAMs, these big opportunities, and looking 5, 10 years down the line, much like Masa originally did with Alibaba.
On that point about TAMs, people are pointing out the split between what's happened with FANG and what's happening to Baidu, Alibaba, Tencent.
Yeah.
Is that China trade at work, or is there something else going on?
Yeah, so very interesting. I mean, obviously huge TAMs involved over in China. And what's interesting there is that the ecosystems that Tencent and Alibaba have put together expose them to so many different things, whether it be food delivery, ride sharing, logistics, obviously e-commerce, media. They have so many tentacles in so many different areas. There's a lot of different avenues for growth there. And that's one of the reasons why I think investors are attracted to those stocks, particularly as you look out a little further than just this year's numbers.
But I guess my question is why those shares have not performed, not kept pace with FANG.
Right, they haven't kept up pace with FANG. I think a couple of things. Some of these ideas that we're talking about are a little longer term oriented. They're not going to be impacting the numbers this year. But look for investor days to come along, provide a little more granularity around these opportunities and help quantify it.